Hi folks, this is Bang here. I just want to show you how to enter a trade as a long put. Remember, when you enter a long put option trade, you have to be very bearish on the stock. Said differently, you expect the stock price to drop sharply in a relatively short period of time for you to make money. Okay, if it doesn't, you lose money, right? Because it's expensive trade, but if it's working in your direction, it could be very profitable as well. Okay, so you need to pick the right stock to trade. Now I identify one stock that I want to use the long put strategy today, which is AAL, which is American Airlines, right? You look at the chart, 1 year chart here. On the moving average, lines are sloping down. The 200 moving average is above 150, and it's also above 50 moving average, which is showing that it's in the steady downtrend. Now if you also notice that the stock price has attempted to break through the 150 moving average 2 times, and it failed, right? Every time it hit the ceiling and drop back down, and it do one more time, it hit the ceiling and drop back down. And today it's doing the same thing. It also want to break through this level, and the stock price actually up today because the oil price is dropping quite significantly. I think it's dropping about $2, yeah, about $2.10 per barrel. So that's a catalyst for the stock price to go up today, but it looked like it's not going to break through this strong resistance again, and therefore you expect the stock price to drop back down and potentially going down further from here. So with that in mind, you want to enter a trade, right? Remember, when you enter a long put trade or you enter a long con trade, the first criteria you want to check is whether IV, the implied volatility, is low or high. General rule is you buy when the IV is low. How low is low? IV rank is below 40, consider as low, right? Above 50, consider as high. So here you want to buy if IV rank or IV percentile is low. It's a good time to buy, right? So how do you check it out? Just go to trade, and under today option statistics, you see the current IV percentile is showing 34, which is below 40, so relatively it is a low IV. So it could be a good starting point, right? Number two, choose the date to expiration of around 60 or above that, because if you choose too short dated option series, the time decay will be fast and it will hurt your premium in a very significant way, right? So choose the DTE ideally above 60. Now I could not find any 60 DTE today. I will want to choose 80 instead. So about 2.5 months from now, expiring on April 2019, right? Stock price is about $36 right now, and you want to choose the delta of about 50 to 60, right? So you can choose to buy a put at the strike price of 37, which have the delta of 52 right now, right? And if you do that, you have to pay somewhere between $3.10 or $3.20. One contract, that would mean about $310 or $320. If you want to enter the trade and get your order filled immediately, you just click on the ask column and pay for the ask price. That will almost guarantee you get the order filled. However, I want to bargain, right? There's no harm to start at a lower price and then increase it gradually to hit somewhere in the middle so that I can get the better price for my trade. So I click on the ask, but I will reduce the premium to about 310 here, right? So I click here and I reduce it to 310, right? Now before I send out, I want to check the P&L graph to see it makes sense or not, right? Right click on it and analyze trade. If you notice the blue line, which is the P&L at expiration, the max loss that I have is 310, right? You look at this box here. If the stock price goes up, I lose money, and the max loss is 310. And if it drop, I start improving my profitability, right? The break-even point for me is somewhere like 34. If it drops below that, I make more money, right? And to me, if the trade double my premium, I would exit it. So there are few criteria for you to exit. Either it double your money, or you hit your target price. If the stock hit a certain support level and you want to close it, that's fine too. Or if your option passed the 30 days to expiration, meaning you have less than 30 days to expiration, it's better to close it, because then you don't have to pay for the fast decay theta that hit you every day, right? So close it when it's less than 30 days to expiration. And another reason, if you want to close, also if the setup here is no longer valid, meaning if the stock price break through the ceiling and go up as an uptrend, then the whole bearish setup is no longer valid. That's where you also close the trade. With that, I enter the trade right now. Check the market price again. Now it's going up 325, and at the bid price at 315, look like you have to raise your price to at least 315 to have a chance to get it filled, right? So with that, then you just confirm and send it out, okay? And the order is waiting to be filled right here. And if it's filled, it's good. If you're not so keen, just leave it there, and hopefully it will be filled in the next few hours when you are sleeping, right? And that's how you enter the trade. And then after that, we monitor the trade over the next few weeks. Hi folks, just let you know, the order to buy a long put on AAL was filled yesterday, $3.15. And you can go to the position statement under AAL, click into it. You see quantity 1, mean we bought 1 contract. And if you want to know the exact timing when the order was filled, click into the quantity there. You can see there the order was filled at around past 1 a.m. in the morning Singapore time. Right now the trade is losing some money, but I'm not so worried because we still have 80 days to go, right? We will monitor this trade over the next few weeks, see how it goes and what happens there, depend, right? What scenario is going to happen? Either it's going to hit my profit target, which usually like double the money, or if I lose half of my max loss, which is in this case about $1.65, which is $165, or if the technical setup of the trade is no longer bearish, then I would be wrong, right? So then I just close it as a loss. Or if we are running out of time, meaning the day to expiration is less than 30 days, I will close it regardless whether the trade is losing or making money. That's how we exit a trade as a long put strategy. With that, I'm signing off. Wish you all the best. Hi folks, just want to follow up on one trade we entered about 1 month and a half ago, and the trade was buying a long put on American Airlines, right? So that if I look at my position statement right now, I still have that position in my portfolio. So I click onto the quantity. What I'm seeing here is I entered the trade on 29th of January, right? Cross midnight, so on in the US time is 28. So today is March 9, so about 41 days, close to 1.5 months. Now, how the trade is doing? Okay, so the trade is doing great. It's making $212 since I opened the trade. So when I enter, I paid $315, and until now I already realized a profit of $212. It's not double yet, so you know my target. I will close the trade if I double my money. Okay, so for me to close this trade, I need to have a profit of $315 or so, $300 kind of, right? Or the other scenario I will close the trade is when the day to expiration is shorter than 30 days. Now it's still 41 days, so still have some time to go, right? About 11 days or 2 weeks from now, I will definitely close the trade. If it's not hitting my target, it's fine too. Now, if you notice the theta, which is the time decay, it's working against me right now. So every day goes by, this
contract will cost me $1, almost $1, so 65 cents, which is not much because we still have pretty long time to expiration. Now, the moment it crosses below 30, this 65 cents can become $2, $3, $4 a day, which quite significant if it keep moving towards the expiration date. So I need to be watching this and then close it before it crosses below the 30 days, right? So just remind you, when we entered the trade, American Airlines was trading around 36.5 something, and then we say that if the stock dropped to around $30, $31, that's where I target to double the profit, right? And that is also coincidence with very strong support level here. I need the stock price to drop a little bit more from here. Now it's 31.83, which is quite a drop from the 36 where I enter. But to double the money, I need the stock to drop a little bit more, maybe $1 from here. So hopefully it will hit that target, and then I can execute the closing order, and I show it to you later on. One thing I can do also, I don't know because the trading session is still going on. What I can do is I can just place an order, right? And to sell at the price that would double my profit. So I bought at 315, so I want to close at $630, so $6.30 per share times 100. So this is the premium that I would like to collect when I close. If within today's session it can hit that level, that's fine, I can exit. Otherwise, I will continue to monitor it over the next 2 weeks or so, and then close the trade with whatever profit or even loss if I have by that time, right? So we stick to the rule. So I just place the trade and use the good till cancellation order so that it can be lasting for until the time I want to cancel the trade. Okay, so hopefully I can get filled at $6.30. That would double my profit, and we monitor it over the next few days, see how it goes. Okay, so I confirm and I send it out, and you see there the trade is still pending, right? So it may not be filled within today, but who knows, the market can fall very fast from here, and then it can be filled, but otherwise will take some time from here to get it filled. Otherwise I close it early. Hi folks, I just want to come back to the trade we monitor about 5-6 days ago on American Airlines. I bought a put contract and I bet on the bearish side of the stocks. So a week ago or 5 days ago, we looked at the trade and it was making about $213. Now it's making even more than that because the stock has been dropping further since then. So if you look at the chart of the stock, right, I entered when it was about $36, and I bet that the stock price will go down, and indeed it has been down since I opened it, right? So it hit some very strong resistance level of the moving average lines, and then it consistently dropping, and I was setting the target at around $31 there. This is the price that I would double the premium that I paid at the beginning. Now, yesterday it dropped significantly, but it did not hit my target. Today it looked like bouncing back a little bit. So what do I do with the trade right now? So I look at my trade position. The trade still have 36 days to go, right? So technically it's still in the borderline, whether I can close or I can keep it. Below 30, I definitely close it. Now it's 36, whether I should close it now or I should wait for a few more days. Now, I sense that the stock has been oversold a little bit and it could bounce back a little bit from here. So I say, okay, why don't I just take the profit early? Now, it's not hitting my target yet, like a double profit, but it's almost there, right? I paid $3.15. Now I'm making $2.22. So it kind of 70%, 75% of the target. That's good enough, right? Then I close it early. I have capital to use for new trade. So remember, I entered the trade with the GTC, good deal cancellation, and I placed $6.30. It never gets filled. Even yesterday, it almost there, but then now the stock price bounced back, and then premiums reducing a little bit. So I say, okay, maybe I should not be too greedy. I just take early profit and close the trade completely. So that's what I'm going to do. So now market is willing to pay me $5.30. So I need to change my order to the new limit price, which is $5.30, and at the daytime, and I send the order out, and it's, yeah, now it's filled. So I have completely closed my trade, and you see the quantity now 0. Everything is removed here. So that's how, buy a put option to bet on the bearish side of the price. And if you're right, you make money, right? Sometimes you lose money as well. Not on the time you make money. And remember, when you buy when the IV percentile is low. So in this case, I bet on the downside when IV was low, and I was right, and the market price moved significantly down. That's why I make good money on the trade. Alright, let's summarize the trade using long put strategy to buy a put option on American Airlines. I entered the trade on 28th of January, and I exited on 13th of March, which means I have been in the trade for 44 days. Okay, so I entered with one contract, which cost me about $3.15 per share, so which is $315, and that is also my capital, or the max loss I could lose, right? Since then, the trade did very well for me, and I closed the trade for $5.30 per share, which is $530 premium I collected back, which translates into about $215, which is the difference between the premium I collected, $530, minus the premium I paid at the beginning, $315. So that is my profit. Now that translates into a very good return on investment for me. $215, which is my profit, divided by 315, which is my capital. That is 68% in a matter of 44 days, which is very good. This is very profitable trade. Now, you cannot expect to make money on the times, right? So sometimes you lose money as well. But in this case, I was betting on the bearish direction of the stock price, and I was right. And the stock moved very fast in the downside, and then I make good money. So hopefully that gives you a complete picture on how to use put option to bet on the stock, from the entry to monitoring, and also to closing the trade.